process. Business study is going to be our subject, and our today's topic is double entry bookkeeping. And today we are going to look how double entry and bookkeeping works. In our previous lesson, we discussed about journal entry, which we discussed mostly concerned about credit and what debit side. But before we continue, I'd like to throw more on double entry bookkeeping. Once we talk about double entry bookkeeping, we are talking about that this means that every debit entry must have a corresponding credit entry, and this is the principle or rule that is followed globally in the bookkeeping system. Every financial transaction has two sides of it, and these are the giving and the receiving part. So the double entry system stimulates that to make a complete recording, and bookkeeper should have these two very aspects. But before that, let me explain this table below. Now you can see that this place we have date, this place we have details, this place we have AC, this place we have debit, and this place we have what? Credit. Now once we talk about date, we are talking about every aspect of transaction must be dated, because it is the date that will bear you the past and the present witness of the transaction. Now let's look at this date. You can see that on May 2018 there is cash sales and there is sales. The cash that the owner of this very survey, which is sales of inventory, was with is 301 and the sales is 401. Are you getting it? When we plus this together, it's at the debit side give us what? 10,000 naira, while the credit side is giving us what? 10,000 naira. That means looking towards this thing, you see that both the receiving part and the giving side, which one is the receiving part? The receiving part is the what? Is the credit part, while the debit side is the what? Giving part. Now, continue with this. You can see that we have two types in double entry, and this type is debit, which is the receiver, and credit, which is the giver. Therefore, the double entry principle stated that for every debit entry, there must be a corresponding credit entry, or for every credit entry, there must be a corresponding debit entry, vice versa. All expenses and losses are to be debited, and all receipts and profits are to be credited. This is how debit and credit works. Every transaction that involves expenses should be recorded under debit, and every transaction that is responsible for profit and credit should be recorded under what? Credit. Let's continue. The fundamental concept of accounting is that every business transaction in money or money wealth has two effects: the receipt of a benefit by one account and the giving of alike benefit by other account. Though if a value is given, it is also received. The meaning of this that where there is a giver, there is also a receiver, who is called a debitor. The first golden rule of bookkeeping therefore stated that you debit the receiver and credit the giver. That is the two rules that is involved in accounting processes. That means the giver is the credit and the receiver is the what? The debit. You credit something like, let me give you an example. Like maybe, let's say for instance, you want to go to the market to buy something. You must give out before you receive a return. Are you getting it now? So everything that you were giving out, we refer that when you are crediting the account of the seller. Are you getting it now? While you also are receiving the value of what the seller is giving on to you. Maybe you went to the market to buy fish. For example, you give the person money, which is the giver. Then in return, you will now receive what? Fish. That's the reason why we say that all this aspect has to do with both the debit side and the what? The credit side. Alright, so now let's look at these two concepts, this basic concept of both debit and credit. Now, if you look at concept number one, it says that all expenses and losses are to be debited. That means every expenses that a business owner is receiving or is having should be recorded under what? Debit account. And all the profits are to be credited. That means every profit that a business owner made should fall under what? Credit. Are you getting it now? What I'm saying in an essence is that the fundamental concept of accounting is that every business transaction in money or money what has two effects, and these effects are the receipt of a benefit by one account and the giving of a like benefit by another account. So if a value is given, let me take for instance now you want or you need water. The water there is your value. So if value is given, it is received. And the meaning of this is that where there is a giver, there must be a receiver. There is no place without a giver that receiver is not there. So in a point of contact where we call a market, when you go to that place, definitely you find many people who are into giving and what? Receiving. That is the two major activities that works in a market. The two major activities that work in market is what? Giving and what? Receiving. Maybe you give out your money and in return they will give you your what? Your value. Are you getting it now? So every money that the seller received is recorded under what? Credit account, because you credited his what? Account. Are you getting it now? Then at the process of making that credit, any expenditure that was made will be recorded under what? Debit. Let's continue please. The meaning of this is that where there is a giver, there is also a receiver, which I have explained. And who is called a what? A debitor. Who is a debitor? That is the next question we should ask ourselves. We now say the debitor is a person who what? Who received. Are you getting it now? A debitor is a person who what? Received. While a creditor is a person who what? Who give out. Did you understand now? The first golden rules of bookkeeping, that is the first rules of bookkeeping, is that you debit the receiver and you credit the giver. That is the first rules. That is the first rules, the first golden rules in business what? Transaction. You what? You debit the receiver and you what? You credit the giver. Now let's move forward. In the process of debiting the account, receiving the value and crediting the account surrounding the value, you end up recording every transaction twice. Once as a debitor entry and again as a creditor entry. Every credit entry must have a corresponding debit entry. I forward my explanation that every credit must have a what? A corresponding debit entry, and every debit must have a corresponding credit what? Entry. Both of them must correspond together. Are you getting what I'm saying? Both of them must what? Correspond together. That is, every debit must correspond with credit, and every credit must correspond with what? Debit. Alright, as we have said before, that in the process of debiting the account, receiving the value and crediting the account surrounding the value, you end up recording every transaction twice. And once a debit entry, again as a credit entry. That means every credit entry must have a corresponding debit entry, and every debit entry must have a corresponding credit what? Entry. Are you getting it? So that is double entry bookkeeping account. Are you getting what I'm saying? We have the credit side and we have the debit side. There is no successful bookkeeping without these two aspects. And the two aspects is the credit and the what? The debit. So every credit transaction must be record or correspond with debit what? Transaction, because it's going to give you one capital. Are you getting it? Maybe you use 20,000 naira to start up your business. it is inside the 20,000 naira that is your credit that you are being credited with, and it's inside the 20,000 naira that you will be making your expenses with, which is the what, the debit what account. Did you understand what I'm saying? That will be the end of our lesson today, and also in our next class we will be talking about introduction to keyboarding. I hope you enjoy the class very well. Take good care of yourself. When we come to school, we continue from where we stop.